418. And the block height that we're going live at is 206422. So with 10-minute Factom protocol block times, around 35 to 40 minutes would be my estimate. So we're going to get to hear a lot from our all-star panel that we've brought together today. They are made up by David Johnston, Managing Director of Yeoman's Capital, and Paul Snow, CEO of Factom Inc., Julian Fletcher Taylor, CEO of DB Grow, and Niels Klump, CTO of Spirion. So everyone probably has the ability to talk. Everyone in the audience can talk, but we ask that you please mute. If you have any questions, I'll keep an eye on the chat. You're more than welcome to submit those, and we'll try to work those into the conversation in a little bit. But let's go ahead and get started with the questions so that people get as much insight on PegNet as possible and why we're all so excited. So Paul Snow, I'm going to direct this first question at you as Chief Architect of the Factom protocol. As you know, there are countless second layer solutions that can be built on top of the Factom protocol. So can you explain why you're so excited about PegNet and you chose to put so much time and effort into it when there were so many other second layer solutions that you could move forward with? What makes PegNet different?
Well, that's a good question. The idea did come about literally a year ago today. I actually woke up from a dream about stablecoins. They were in the news about a year ago, and I got to thinking, how does one avoid contracts, and how does one avoid a bunch of financial instruments, derivatives, and that sort of thing, longs and shorts? And reserves. Reserves are problematic because of auditing and the tie to central authorities that have to hold the reserves. And so this problem has been interesting, and the core of it just kind of came to me, and just not by planning, but just to the day it's landed on the day that I started thinking about it. And I only know that because it's my brother's birthday. So happy birthday, Corwin. Why am I excited about it? I'm excited about it because cryptocurrency and the whole Bitcoin architecture has been about how do we create financial services that are not tied to large central authorities that are able to game the system. And PegNet is a step in that direction. It incorporates stable values like the dollar and the euro, the yen. It incorporates remittance currencies like the Mexican peso, and the Brazilian real, and others. It holds precious metals like gold, silver, platinum, and cryptocurrency. It will allow the users to create their exposure against these assets and not involve so many centralized parties, and still make payments and do those financial services. I think that this is really good because it's the second layer solution that Factom that I've been involved in, that puts on top of Factom a true crypto community project, crypto community asset that's truly different and distinguishes us from other solutions. So I'll leave it there. I can talk all day.
Thank you, Paul. Actually, I think I'll move on to the next question. This will be for David Johnston, Managing Director of Yeoman's Capital. David, I believe you've been in cryptocurrency for around 8 years now or so. You're old school. And I've seen you on different projects, but I haven't seen you this engaged and excited for a long time. What is it about PegNet that has you so excited?
Well, for me, it feels like the culmination of work that I've been involved with since 2012. I I remember writing the email to Mike Hearn in 2012 about the idea of putting assets on the blockchain. And the tech wasn't really there yet to do that. And so, it wasn't till 2013 when Mastercoin came around, and that was the first effort to put assets on the blockchain. And that resulted in stablecoins like Tether. But obviously there was a lot of limitations there. You had the reserve problem. How do you know there's as many Tether in the bank as there are Tether in the blockchain? And so they were sort of all started as these centralized solutions. And it wasn't until the birth of Ethereum and a lot of the smart contract approaches that people really tried to open it up and have multiple custodians and things like that. But the ideal I've always wanted is a fully decentralized system where anybody can issue the asset and they're self-issued, there's no other party involved, and has all of these attributes where there's no reserve problem, it's fully auditable, et cetera, et cetera. One of the other big challenges early on was liquidity. There were hardly any exchanges that could even trade these assets. I mean, people were building exchanges from scratch just to service these assets. And so the idea with PegNet that we have guaranteed liquidity because any pegged asset can be exchanged for any other pegged asset according to the Oracle price, according to the market price that is published, that's pretty amazing. So we've gotten to this end state now where it's fully decentralized, fully auditable, has guaranteed liquidity. That's really powerful. I mean, we've seen how much the market has demand for stablecoins. There's $4 billion in Tether on the market today, despite its risks and downsides, right? So unlocking that use case for Factom, I think it's sort of that ERC20 moment for the Factom protocol. Just like it was for Ethereum, being able to create tokens and really sort of directly have this use case people care so much about, I think is really powerful and something that Factom needs as a way of sort of engaging the broader crypto community.
Thank you, David. So Niels Klum, CTO of Spirion, one of the blockchain as a service companies in Europe that's really getting a lot of traction. How do you see PegNet being integrated in solutions that'll be beneficial to your clients?
Let me see. I see several integrations possible with PegNet. For instance, we have a tokenization solution. It's a tokenization solution for social benefits. Basically, we have local governments handing out tokens to their inhabitants to pay, for instance, for sport clubs or musea or to get some clothes. Typically, those are, of course, low-income inhabitants to get some additional money to fund for their kids, for instance. And we have demands, for instance, to create marketplaces, but also demands to have donation options, for instance. And basically having stablecoins integrated into a solution like that means you have a really nice onboarding and offboarding solution. So it's kind of like a closed economy we have with our solution, with our tokenization solution, where tokens are being handed out by the government right now, the local government, into the wallets of their inhabitants, and those inhabitants can pay, for instance, for shop owners or musea or whatever that are associated with the project. Once those tokens are in the hands of the shop owners, they send it back to the local government, and the local government basically pays out the shop owners. That means that the inhabitants cannot use those tokens for other goods or anything else, basically. Having additional parties being able, for instance, to do donations and deciding what to donate on using marketplaces would be a really cool addition, and something like PegNet to make that possible. Another solution, for instance, would be in smart contract solutions. We have a lot of requests for smart contracts. And typically in smart contracts right now, you have this really volatile tokens, or you have your own tokens. But being able to have stable coins in smart contracts and even have stable coins you can change into another type of stable coin. So for instance, from euro to US dollars, without having to hit an exchange, yeah, that's something I'm pretty sure of. We will see a lot of demands by our customers.
Thank you, Niels. So while Niels was talking, I believe that we ticked over to block 206419. So we're one step closer to going live on mainnet. Again, the block height we go live is 206422, and the Factom protocol has 10-minute blocks. Next question is for Julian Fletcher Taylor, CEO of DB Grow, which architected the Factom Asset Token Protocol on top of Factom, also known as the FAT protocol. It's a tokenization and smart contract platform. Julian, as one of the architects behind the FAT protocol, you must see some use cases for PegNet. I'm curious, what makes how does PegNet make tokenization and smart contracts more powerful, and how do you want to see it integrated?
Yeah, absolutely. So our goal is creating an asset value layer of the internet. And in doing so, one of the things that's very important for that is high liquidity. To achieve the goal of this sort of global liquidity pool of assets, liquidity is extremely important. If you have tokenization projects that are siloed from one another, it massively decreases the utility of those tokens. PegNet, I think, can bring a large amount of liquidity to the FAT token ecosystem. It acts as a trading medium, a store of value to put your money into different assets, and as well as a payment rail system. So by introducing all that liquidity, we think it can make the utility of all tokenized assets in this ecosystem more valuable. Beyond that, we see PegNet bringing more than just this pegged token system. It actually brings decentralized oracle systems to Factom. That's extremely valuable, laying that framework, because we think that those sorts of oracle systems can be used across the Factom ecosystem as well as the FAT ecosystem. So there's a lot of synergies possible here. And then beyond that, what it allows us to do is by merging the FAT ecosystem and FAT technologies with PegNet, it enables us to do things like run decentralized stable coins and stable assets in things like FATs, WASM-powered smart contracts. And that's an extremely powerful synergy there.
So when you say that's a powerful synergy, Julian, why? What does that do for the end user, the end client, that they can't do right now?
Yeah, so it allows you to use smart contracts in a metered way, in a way where your actions on the smart contracts cost a certain amount every single time, and you can predict what that'll be. A smart contract can hold a value that is predictable and stable. So the smart contract can act on value that it itself holds, knowing that value isn't going to fluctuate. So all of these things are only possible if you introduce something like a stablecoin, or only like easily possible. And PegNet gives us a fully decentralized stablecoin. So we're really excited about what we can do there.
Thank you, Julian. So it sounds like PegNet is one of the keystone pieces that brings all the different offerings that the Factom protocol currently has and is building together, in contact with people wanting to get in can communicate that this is being recorded and will be shared as soon as possible, we'd appreciate it. Moving on, Paul Snow, when you designed PegNet, you chose LXR hash as the algorithm instead of a host of different, more common, well-known algorithms. Can you please explain why that is? I think you're on mute, Paul. I still can't hear you, Paul. I think you're muted, buddy.
Yeah, I had queued up something else and it was preventing me from hitting the mute key. So yeah, the LXR hash was chosen in order to provide CPU mining now and forever. It is a relatively unique approach to proof of work, and if I look at all hashing algorithms to date, even the ones that use a lot of memory, the problem has been that, or the advantage ASICs and GPU mining has is that it is faster computation. These hashing algorithms are CPU bound. To some extent, some of the high memory hashing algorithms are somewhat memory bound, and that prevents a huge differential in hashing on a regular computer, general purpose computer like your laptop, and an ASIC. So to illustrate that, SHA-256 was 1,000 times, or is 1,000 times more efficient on a ASIC than it is on a CPU. Some of the later algorithms are the ASIC's only 10 or 20 times more efficient. But we targeted something completely different. And what we targeted was the memory bottleneck. And so the LXR hash uses a very, very large gigabyte of RAM set of random numbers that the hash frequently goes and pulls out in order to continue the next step of the hash calculation. Now, you do have memory caches that speed up access to RAM, but that only works if the accesses are localized or serial, and we're completely random, which means we blow the cache. And so rather than being CPU bound, we are RAM bound, which makes LXR hash the first RAM hash to hit the market. And that means that now and forever, you can hash as effectively on your computers or on existing systems as you can on ASICs or GPUs. And the fact is, when you're waiting on RAM, you're not burning power on your CPUs. That means that the LXR hash is 90% more efficient than a SHA-256 hash or most of the other hashing algorithms that are out there. So for these reasons, we're using the LXR hash for proof of work. I would make one last statement. We are not using this hash for security because Factom provides the security of the blockchain, the proof of a block in all of the past history, using all of the proven cryptographic hashes, where the LXR hash is solely used for proof of work.
So Paul, I've been in crypto since around 2011 and seen no shortage of projects that have claimed to be CPU miners, GPU resistant, ASIC resistant, etc. And usually at some point they fall by the wayside. How confident, for those of us that might not be as technically proficient as you, how confident are you that we'll be mining only on CPUs 6 months or a year from now?
I'm very, very confident because the bandwidth to RAM is a problem all systems have had forever. And the only known solution to make RAM faster is to cache it close to the CPU where you can access that RAM very quickly. But caching is always more expensive than DRAM. Basically, and this is kind of a technical difference, basically RAM is so big in terms of the number of chips that in order to access that RAM, you have to go through the I/O out of the chip and onto other chips, grab data, and out of those chips and back onto the CPU. So as long as we can keep our random byte lookup larger than you can conceivably create caching, we will always be targeting the memory bandwidth problem rather than the computational problem on chip. And so today we're launching with a 1 gigabyte byte lookup. We can expand to 16 gigabytes, 32 gigabytes. As computers get bigger, we can always move the bar and keep it above what reasonable caching to RAM can do. Now, when you talk about ASICs, ASICs can absolutely drive the computation side of the LXR hash to 0, but if that's less than 10% of the time spent hashing, then there is almost no economic benefit to building specialized hardware. All of our tests show that you want to go the opposite way and go to conventional CPUs attached to DRAM as cheap as you can build them. And that means that the LXR hash, even when there is specialized hardware, it will be commodity hardware that everyone can access, not specialized mining hardware that only well-funded mining pools can access.
Thank you, Paul. So we're currently working on block 206421, I believe it is. Yep, 421, and we go live on 422. So my math is correct. We're probably around 4 to 5 minutes for mainnet miner starting, if anyone wants to double check me there. While we're doing that, let's move on to the next question to Niels Klump. So USDC and Tether are, of course, the most well-known stablecoins at this point. Niels, do you believe that PegNet, the way it's designed and implemented, is potentially superior? And if so, why?
Yes, well, of course, the other systems, well, they kind of have proven themselves, but and kind of in odd ways as well. They are heavily centralized, of course, both Tether and USDT. Tether, of course, we have seen massive swings in all cryptocurrencies because of people being insecure about Tether. Are the reserves really there? We have seen, I think it was the New York State Attorney General basically having at least starting a lawsuit or something like that against their parent company, where the parent company, where Bitfinex basically had a loan from from Tether, so there's a lot of questions about whether they really have the reserves they claim to have. I believe with USDT, they are more transparent about it. There's a large company, of course, behind USDT, but still, I read this article a few months back, for instance, about USDT, that it's a smart contract they use, and apparently that smart contract basically points to a proxy, which means if they wanted to, would be able to replace the contract altogether. So it's completely centralized. With PegNet, you don't have that. It's fully decentralized. Nobody can make decisions on their own. It of course, uses proof of work. And what's also really interesting about PegNet is that you can do off-exchange conversions from one token into the other token. which means it opens up basically possibilities for doing arbitrage without having to use two exchanges, for instance. I think the fact that you can do off-exchange conversions combined with a fully decentralized, non-collateral based solution, which you have to prove to hold and to have in reserve, are really superior to the current existing solutions like Tether and USDT.
Thank you, Niels. Appreciate it. We ticked up a block yet? Doesn't look like it, but we're getting close. All right, I just got a message that mining has started. Is anyone able to confirm?
I'm just looking up the Explorer. I'm still seeing 206420 as the latest thing in the Explorer.
I believe we're still 2 blocks from starting mining.
Okay. And for those interested in joining, I've posted a link to the chat. I'm streaming the audio from my YouTube channel. So, and I've also posted that on Twitter. Anybody else wants to listen in to the discussion beyond the folks we can fit here on Hangout.
All right, David, as long as you're up, I'll throw a question your way. So the token we're all going to be mining is PNT, which stands for the Peg Network token. It's important, from what I ascertain, that it be listed on exchanges. Mm-hmm. Why would exchanges want to list PNT and potentially other PegNet assets? And do you think we'll see any exchange listings in the short term?
So taking a step back, there are 2 legitimate ways to create a pegged asset in the PegNet, right? You can burn factoids and create pegged factoids, and from there trade into any pegged asset you want, or you can burn electricity via some mining, earn PNT, and convert your PNT into the pegged assets. So as one of the 2 gateways into the system, it makes sense that people will want PNT as a mechanism for getting those pegged assets. You can literally mine digital gold for the first time in the world, if you will, by mining some PNT and converting it into pegged gold, which is pretty cool and pretty novel. I don't think that's ever existed before. So, that as a gateway is really valuable. And what we've seen is most of the tokens that are mined get a lot of listings pretty quickly because lots of people can join the mining community. It's not sort of like a token sale or something where there's a short window of participation. It's this ongoing window of participation that everybody can take part in. And I think the fact that we've picked CPU mining and the developers have gone through this LXR hash makes a big difference because it means you don't have to be some big industrial miner to really participate. So I think we're going to have a pretty substantial crowd of people that are earning these assets, and those are the people that drive listings. It's the people talking to the exchanges. It's people that are members of those exchanges, that are shareholders of those exchanges. That tends to really drive things. So I look at Ravencoin as a good example. They did their launch, I believe it was sometime last year, CPU mining, until somebody figured out after a while how to put a GPU on it. But it had a good period where it's basically just an organic community project, and they've got more than 50 exchange listings, right? And there's no foundation. It's very much like PegNet in the sense that there's no central entity behind it. It just sort of organically emerged. And I'm very optimistic that we can really go from that same playbook and incentivize people and make it just a completely open system, a fair launch. I've spent a lot of time, I've gone around and translated the community presentation as many languages as I thought, there were sort of really active crypto communities. So we have PegNet presentation in English, German, Chinese, Japanese, Korean. We really want to get as many people participating as possible. And so long story short, I think that's really going to pay off, this sort of permissionless means of participating in the system. One thing that I'll be interested to see is who will launch the first pool. because right now you're going to get those top 10 winners, and they may shift from block to block, but for hundreds and thousands of people to participate, the first pool coming online, and I know people are already looking at what software they can use for that. So it'll be exciting to see that roll out soon too. Something we should probably do, another launch video around.
Thank you, David. All right, I can confirm that mining has started. I'm watching one of my laptops here mine. I have a 2-year-old and a 5-year-old, so I'll use Lego as confetti. So everyone, congratulations on mainnet mining going live.
Woo! All right. Excellent. So we'll get, I guess, a confirmation at the end of the block and be able to see a bit more of the information.
Sounds good.
So David, did you just say people being able to mine gold? Because I'm pretty sure that's already happening for at least a few hundred years, to be honest.
Digital gold. Digital gold.
idea,
the first time they can mine digital gold. Yeah.
Yeah, I'm jumping in here. The idea is we can put a conversion in the OPR record, and so you will actually earn your rewards in gold tokens. So you'll actually literally be able to mine gold tokens.
Yeah, that's pretty cool. Considering most people, given the industrialization of mining these days, probably have never had a chance to mine regular gold. They all have laptops though, so now they can mine digital pig gold.
All right, so moving along, I'll open up this question to any of the 4 panelists, and I'd love to see multiple answers. Right now, there's 32 assets on PegNet, and once we see traction, do you see additional assets being added, maybe more unique assets? How do you see PegNet changing and expanding in the future?
I'll jump into that one. I mean, I would love to see us add more currencies. What's sort of unique about PegNet is you have an ability to add all of these regional currencies that I don't think there are really any stable coins for today. Because in the reserve world, you would have to have kept a bank account open to have the reserve to issue a stable coin. So most of the major stable coins, right, it's dollars and euros, and maybe there's a few exceptions, but I don't think a lot of the exchanges around the world that are trading in Mexico or the Philippines or Brazil really have a regional stablecoin option. So depending on what we can get from sort of the oracles and accurate price data, that's sort of the bottleneck. Depending on what we can get from that, I'd love to see more expansion, especially into areas where, very active communities in Argentina and other things like that. So that'll be a challenge. We can add a lot more crypto. We've got a good list of major projects, but there are more great crypto projects coming online all the time. And then, I think we're going to expand from there into different asset classes. But I think actually having a whole network of these is almost like we're creating a parallel economy to the global economy, right? We're creating these pegged assets, and if we can reflect more and more assets over time, effectively we're giving people permissionless access to any asset they want in the global economy. And that's really interesting because most of the crypto assets today, they're sort of these small new projects emerging into the world, but we haven't had, outside of dollars and euros, much of a way to reflect the rest of the existing economy and give people a digital representation of that, right? And this is a very interesting way of doing that that's fully decentralized. So anyway, personally, I'm very excited about sort of expanding the network, and I think it's one of those network effect things where the more of the real world economy we can absorb into value that people can peg, the more powerful the network will become. That's my 2 bits on it.
Yeah, David Chapman, I'd like to add that any market asset can conceivably be used. It can be reflected by a peg token in the peg network. We will not be able. The architecture of the PegNet does not allow for riskless assets. Synthesizing riskless assets or surefire wins is just another way of creating a Ponzi scheme, and the world collapses. But real market assets we can peg to. So I see us being able to peg to stock indexes, maybe some stocks, maybe connecting into some other true commodities like oil prices and energy prices. As long as there is a firm and real-world pricing data behind that asset, we can consider adding that to the PegNet. There's one other interesting asset that I would like to see the PegNet consider, and that would be the construction of some baskets where the composition of the basket relies upon the crowdsourcing the decisions that people in the PegNet are making. So you basically pick a few assets in crypto and a few assets in currency and metals, and basically using the capitalization of those assets, you price the basket asset. And that might be a very, very interesting way for parties to hold a token, but have it manage the risks and react to the risks in the market in a crowdsourced way, where all the parties making these decisions have their own self-interest. They're holding these assets based on what they believe in. And lastly, I would note that on the initialization of the PegNet, this is a asset we've never seen before, because we have never seen 100% user-issued tokens with 100% of the stabilization effect, depending upon users acting in their self-interest in the market. In other words, there is no operator, there's no one setting the prices, there's no one that's issuing assets, there's no one that's taking a long or short position and using liquidation of people's positions in order to maintain stability. None of that's going on here. It's just a simple user-issued, user-managed asset. And this is going to make it very, very hard to figure out what the tax reporting should be, given that there's no exchange and no transaction when you convert from one asset to another. But I do see that I believe that the government will decide to tax these conversions, but I see that having baskets that reflect positions, avoiding transactions on the part of the user that can be interpreted as a taxable event. And so yeah, there's just a lot of very interesting things we can do with this architecture that has never existed before. So there's so many outside the box things we can do.
Thank you, Paul. So I can confirm that the first block submission window closed, valid submissions were received, and I can also confirm that I did not win any of the first PNT, so I'm going to go ahead and rage quit this stream. I was really hoping to get some of the first Genesis blocks PNT, so
I should point out, I think it's interesting to point out, 500 Oracle price records were submitted in the first block. So this represents a fairly large number of miners that were willing to commit to the beginning of the PegNet.
I can confirm that on the Factom Explorer, the number of EC entries is 508.
508.
Yep.
So I'm a little bitter here, but we'll move on. Does anyone else want to add to that question, Niels or Julian?
No, I think Paul explained it pretty well. I think we will see novel use cases like the basket Paul mentioned, which is something which is not possible right now. And I'm also really interested in having stock options, for instance. Of course, people in Western countries can buy stock, but there's a lot of people in the world that either cannot buy stock because the stock is too pricey, so they only can take a certain share of stock, for instance, or they just don't have access to it. And using something like PegNet, where hopefully in the future you might be able to have some tokens that track a certain specific stock, like Amazon or Apple or whatever. Yeah, that would be a really interesting use case as well.
Yeah, absolutely. Oh, yeah. Yeah, what's so exciting about it is the nearly infinite flexibility. As Paul said, as long as there's proper price discovery for the miner, and as long as the outcome isn't predictable, which makes it a riskless trade, you can construct pretty much any type of contract, derivative, representative token, anything that you want, and put it up to the miners to be added, and be able to convert into that asset. And that's really exciting. It allows us to maximally use our creativity to come up with different forms of assets.
Awesome. And just a question, David or Paul, maybe you guys can unpack the entries a little bit for folks. So if there was 500 entries, does that represent 500 miners, or are people probably using multiple entries for an Oracle price record?
Yeah, I did a scan through the, just statistical popping around through the records submitted, and it's very clear that multiple records were submitted by some miners. The difficulty is a bit higher than I expected, so I suspect that some of the people that are mining here and getting these high difficulties in multiple records have deployed significant hash power. I did not see any of my records. So yeah, I'm gonna confer with David, and I'm gonna keep smiling until the video's off. Then I'm gonna go rage quit. But
yeah, we're getting it. It appears there's some pretty powerful miners out there. So
yes, multiple different, because every miner provides its ID. It's self-reported, so they can certainly obscure things. It'll take a little bit of analysis to see what it is. In the next block, we'll see who the winners are. Obviously, if you run the grading software, you could know the answer now. But for most of us, we'll get the in the next block, we'll get the list of entry hashes for the 10 winners. So that'll be kind of exciting too, to see who won the first block.
Well, I mean, for me, it's pretty cool that we've already attracted serious hash power to the community. And I would point out, for security purposes, that's really important, that nobody can input bad data with a trivial amount of work. And so I'm glad that people and players are flowing in, and that will really help bootstrap the system and secure the records, because the more we can grow that ecosystem, the more secure those records are going to become, which is, I think, the primary thing that will drive confidence in the quality of the records and then the usage of the system. People aren't going to convert a ton of capital into the system until they see enough security move in. So, a silver lining for those that didn't get in the Genesis block, I don't know if I did or not, we'll find out later, but the silver lining is that's really good for the security of the network, that we're increasing the proof of work required. So it'll be interesting to see that evolve here as we move forward.
Hey, I should give a quick thumbnail of how we figure out the winners. So there's 504 blocks that are submitted in the Genesis block. The way the grading is done is we first take the top 50 by difficulty. So you have to have had enough proof of work to get into the top 10% of that 500 set of records roughly. And then with the top 50, proof of work no longer matters. What we do is we look at how agreed, what the average price for every asset is, and we look at who is in most disagreement. We throw out the guy in most disagreement, and then we compute again what everybody believes is true, and we keep throwing out the records that most disagree with the body until we've narrowed it down to 10. And then of that 10, whoever is in the most agreement with basically the top 50, that miner gets 800 PNT. The second most agreeable gets 600 PNT, and then everyone else in the top 10 gets 450 PNT. So that's how the grading works. And so it's about proof of work to get your voice heard, and then it's about agreeability with a top 50 to actually have a winner. So you can't just mine and put a ridiculous value and expect that ridiculous value to be reflected in the prices in the OPR record. You'll just get tossed out. So there's a very, very excellent article that was written by Jose Gara, G-A-R-A-Y, on oracles and Schelling points, S-C-H-E-L-L-I-N-G. And we're basically implementing with adding mining to it, but we're just kind of implementing this algorithm. It's a very, very brilliant way of crowdsourcing prices.
So Matt McKibben asked in the chat if we were inserting any messages or an article into the first block like Satoshi did. Was anything inserted into the Genesis block or second block?
No, we didn't. We did not insert anything into the first block. That would have been a good idea.
All right, we'll start over. Since I didn't get any PNT in the Genesis block and we didn't insert anything, let's go ahead and start the network over and do this right this time.
Looks like we've got the winners. I just saw the text on Discord and posted it here to the chat. So I don't know if it all came through, but 1, 2, 3, 4, etc., etc. There might be a text limit here on Discord. See if I can get the rest of it in here. And
yeah, that confirms I am not a winner. But YJQ1 has been or YJQ has been a big participant on the testnet for a while. I recognize that name, as well as Zainin Uniting, or however you say that one. So both these participants have been big supporters on the development of the PegNet, at least in terms of testing.
So let's talk roadmap for a minute. So this is what we're calling PM1, being that precursor we're using for all the PEG tokens, and then milestone 1. So release PNT mining is milestone 1. What are we looking to see released with milestone 2, milestone 3?
Well, milestone 2 will be adding conversions that will allow parties to move their assets around into the other assets. One of the things that's happened now, and I doubt anyone's done it quite yet, as well as enabling mining, we've also enabled burning of factoids into the pegged factoid asset. So starting today, you can move your factoids into the PegNet. From there, you'll be able to convert them into dollars or gold or whatever asset you like. And those conversions start in the next milestone. And then the next milestone after that is transactions. And once we have transactions, then you'll be able to send your assets to other parties. And the PegNet will be fully feature complete. All of the code for transactions and conversions has already been written and we've begun testing. So it will be more of a matter of decisions about minimal infrastructure to support conversions and transactions in order to deploy milestone 2 and milestone 3.
So as someone who has now not gotten any PNT in the first 2 blocks, it looks like I'm going to have to be burning some factoids, the market tradable token of the Factom protocol, into PFCT and then converting it to PNT.
Yes, if you want PNT, go ahead.
When do you see me being able to burn factoids for PNT? Can you give a rough timeline?
Yeah, it's at least a week. It's probably 2 weeks before we turn on conversions. And then it'll be a week to 2 weeks before we turn on transactions.
Okay. So go ahead.
So as soon as you have conversions, you'll be able to convert your pegged factoids into PNT. I will say that PegNet is not going to be terribly different than any of the other proof of work architectures, where in order to get a bigger position, it's better to effectively buy tokens than try to mine them. Mining is a matter of hardware commitment, a lot of effort, risk, and the like. But buying factoids and burning them into the PegNet is pretty much as easy as going to your wallet and doing it. So the mechanism to secure a position in the PegNet, for most people, is probably going to be through that pathway.
So the second block 206423, is on the Explorer now, and it shows 402 entries.
Yeah, there is software in the reference mining code that looks at the difficulty and decides whether or not you should submit your records. So a lot of the people that didn't submit records at all, you didn't burn any ECs or anything else while you were mining. So this is about preserving your entry credits if you don't really have a chance of winning. So as that software tunes into the difficulty and the difficulty levels out, then what's going to happen is it will drift down to about, I'm going to guess it's going to drift down to the neighborhood of 200 OPRs per block. But right now it's in the tuning phase.
Makes sense. So what I'd like to do at this point is open up questions to the audience. You're more than welcome to go off of mute and ask the question direct, or if you just want to type it in the chat area, that works as well. While that's happening, if no one opens that up, if any of the panelists want to make any further remarks, please do that as well.
Well, I just want to say this has been a lot of fun. I think we should do one of these for each of the milestones and conversions come out, and when we get to transfers, because I think each of those steps sort of unlocks new capabilities. So if it's a week or two from now, that'd be great. Let's plan on it.
Sounds great. Any questions from the community? You guys did such a good job covering everything that their minds struck. All right, I'll open it up for closing remarks from the panelists.
Paul, you want to go first?
Yeah, sure. I really do appreciate all of the massive effort from the community to build the PegNet. It should be noted that the PegNet is an independent and distributed autonomous project. It does not belong in any way to Factom Inc. It doesn't belong in any way to David Chapman. It doesn't belong in any way to any of the other contributors. It is a independent and unfunded effort. I would also like to say that there was never an ICO. There was no tokens held to the side. All tokens created in the PegNet come from user activity, whether you mine them or you burn factoids into them or you convert them from one asset to the other. No tokens is ever issued by anyone other than users. So this is one of the most regulatorily compliant architectures attacking this particular problem that I have been able to see, read about, or analyze. So I really do appreciate making this possible, because the only way to make this possible was all the donated effort, time, and energy, and I really thank everyone.
Well, so I'm going to interrupt the other closing remarks because there was a question on David's YouTube stream. The question was, for those of us who have machines that do not have multiple cores, is it possible to still receive rewards?
The answer to that is yes. The minimum machine that will receive rewards is a 2 gig machine with at least a core, and you can conceivably receive rewards. I would say that we're rapidly getting into the point where you want to join a mining pool where you're getting a proportional reward from the mining pool rather than attempting to get a full reward inside of the PegNet. I would classify running a 2 gig machine with 1 core as kind of buying a lottery ticket. You could absolutely win. What are the odds, right? But in some sense, it's a really cheap lottery ticket. By my measures, it costs you about 1 watt of power to run a miner on any of the hardware I've looked at, and so that's kind of holding. So if you have your machine running anyway, and you're willing to burn something that's like 1/6 of an LED light bulb to just have a chance of winning, go for it. And this is why having the PegNet CPU mine is so important. It allows so many people without having to spend huge amounts of resources to be involved in price collection.
And I guess the next question is how to join a mining pool.
Well, we have to build one. We are working on some open source software so that anybody can set up a mining pool. We do recognize that mining pools are necessary because it's kind of complex to deal with prices and all that sort of stuff. But it's also important for everyone to have a stake. And so mining pools allow much greater distribution of participation. So we need both mining pools and mini mining pools.
Thank you, gentlemen. Julian, Neil, would you like to input any closing remarks?
Yeah, sure. I think that basically what PegNet is, besides the stablecoin, it's also incentivizing people to publish Oracle data, which is kind of novel as well, of course. And it's also, I think, a showcase of the Factom protocol itself, that you basically can create these novel solutions on top of the Factom protocol, which hopefully will see real-world adoption, hopefully helping a lot of people out, providing a fully decentralized stablecoin network for the world to use. And really exciting to see it happening, and I'm really excited to see what the future will hold for PegNet.
Thank you, Niels. Julian?
Yeah, I mean, I second all of that. It's extremely exciting to see this all come together. It's a great representation of what you can build on Factom from a lot of different angles. All of this just lays down this sort of foundational infrastructure to build further technologies on. And that's what's really exciting to see is the buildup of all of these foundational technologies on Factom, digital identities, decentralized oracles, tokenization systems, smart contract systems. We're seeing it all come together, and making it as easy as possible for somebody to come and innovate on top of the Factom protocol with all of this infrastructure ready to be used and to be used cheaply and for a predictable cost. It's just fantastic to see, and I'm excited to see what the next round of people will build with all of this.
Thank you, Julian. Thank you to our 4 wonderful panelists for joining us here today, as well as all the listeners. And hopefully we'll be back here in a week or 2 to launch conversions. David Johnson will be posting this as soon as possible to, I believe, YouTube, but we'll get that link disseminated when it is live. Thank you all, and good luck mining.
Take care, guys. Thanks.
Take care.
Hey, thanks
Thank
everybody.
you all. Bye.
Bye.